Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. This is Trending Markets, our weekend review for September 4th, 2015. Following the release of last month, August jobs report, we did have the Standard & Poor's, Dow Jones Industrial, the entire U.S. equities complex as a whole begin to trade lower, dramatically lower on the week, lower on the day. Let's take a look at the board. What we are looking at is off almost 300 points. Over 1.5% in terms of the decline, just above 16,000 at 16,102. The real tell of the tape, as far as I'm concerned, is looking at our weekly chart. Now, by no means did we come anywhere near the lows that we hit last week at this severe correction. And I underline the word correction because there is absolutely no concrete evidence that we have entered a bear market. Right now, we are simply looking at this as a correction, but these lows were not breached, but we did touch upon 16,000 in terms of a low. And that, of course, is the second time in 2015 that we actually touched upon these lows at 16,000. The last time prior to these two occasions, meaning this week and last week, came back in approximately 2014, and 2014 right towards the last quarter of 2014. So we did touch upon 16,000 and managed to close just off of that. S&P's also, of course, showing that kind of strain, off about 1.27%. That trading at 19.21 on the day. The dollar, of course, that was down today, but down very nominally, 96.23. Didn't have much of an effect. But the really interesting market that we've been following very closely, of course, has been the crude oil market. Now, we had this tremendous rise in the crude oil market. We're looking at a daily chart. And when you consider the fact that we saw this market bounce off of these lows at about, what, $37 per barrel, we've seen it gain roughly $10 per barrel, which would be $47.50, so just closing, what, about $1.50 off of that. But what we're seeing in crude oil that I find interesting for the first time is congestion in the chart. And what I mean by that is you've got this band of trading in which we've got our highs roughly at about 49. When we look at these lows in here, they're around 43. And the one thing that I do see in terms of just a very, very quick read is that you've got a series of lower highs coming in. You also have a series of higher lows, and that to me is really the beginnings of somewhat of a compression triangle. Again, this is a daily chart, but what that tells me is when it reaches the apex of this particular compression triangle, we should see some sort of release of energy or a sizable move in the market. Now, in terms of looking at oil from simply the standpoint of a weekly chart, what we are seeing is the second consecutive week of higher closing in oil, although when you consider the amount of increase, it is minute compared to what we saw last week. My belief is still that we should see weakness in oil and weakness in the equities market. Although when we look at some of our other technical indicators, I have the MACD in the middle and our stochastics on the bottom, what we do see is, for example, on the MACD, due to the recent rise that we have seen in oil over the last couple of weeks, you can see that our lines are converging. They are coming together. And at the same time, we do see the market, according to our stochastic indicators, as being extremely oversold. We're going into, obviously, a 3-day weekend, but these are the two primary markets that I will be looking at to initiate trades last week, and that is shorting crude oil unless we have a tremendous turnaround, and I don't believe that these last 2 weeks have shown us that as of yet, and the equities markets, which continues to be under extreme pressure. Have a great 3-day weekend. This has been Gary Wagner. We'll talk to you on Tuesday for another Trending Markets. Bye-bye.